Good morning, everyone, and welcome to the AEM Agriculture Services and State of the Market Report. My name is Anita Sennett. I'm Director of Agriculture Product Management here at AEM, and joining me is Benjamin Duck, our Market Analyst. Over the next half hour, we will not only provide you with a State of the Market Report, but we'll also take a look at some of the AEM services that are specifically geared to you, our ag members, who make up more than half of our 870 members. So we'll start off with a look at what our team in DC is doing for you, take a quick look at our tech team and their work, then we'll have the market report, and then we'll wrap up with our staff programs, global business development, education, and trade shows. So here's a quick look at what AEM has to offer you. And as said, we'll start with our government and public affairs. So we do have an office in Washington, D.C. It's located 3 blocks from the White House. So if you're ever in the area and would like to conduct meetings, that conference room and those facilities are there for your use. Our team there can also arrange meetings with legislators and trips to the Hill, but their primary reason for being there is to educate those legislators and lawmakers on manufacturing and agriculture. They do this in 3 ways, through lobbying, grassroots, and advocacy. So just a quick look at some of the issues for which they've been lobbying. Ag equipment on-road regulations, you may be aware that in Wisconsin we recently had some regulations passed. Our DC staff, as well as our technical team, was in on those meetings from the get-go, and due in part to their active participation and educating on the size and scope of ag equipment today and the farmers' needs to travel between different expanding farms. Those regulations actually came through very favorable for us with an actual increase in the weight limit allowed. Our team was also able to attach national lighting and marking standards to the highway bill last year, so that rather than a variance from state to state, those are consistent, and those were actually the ASABE standards that were attached. They continue to lobby for ag equipment depreciation so that you, our ag members, can enjoy the same 5-year schedule as our construction members. And they've also been engaged with another state issue in New Hampshire, whereby they basically put agriculture equipment under the same category as automobiles. So that even applies to, so the auto dealer laws actually apply to agriculture equipment. That is still in process. It's currently under appeal, and we're anticipating a March result. Fugitive dust and bee health is something we've also been actively engaged with, working with EPA here in the U.S. and the Canadian counterpart, and have successfully been able to avoid any mandates that are unfounded with no scientific research backing them. And we always lobby for free and fair world trade for our members. Our advocacy efforts go through our I Make America campaign. We've got about 40,000 supporters at this time, so there's pretty much employees of our member companies, and if there's an issue we really want to push through, we will send an email out to those members, and they will send it out to forward it out to their legislators. So our next push will be for transportation infrastructure. And our advocacy efforts, we really like to partner up with a lot of different organizations, and right now some of the key issues that we're looking at are the consumer perception of agriculture in the U.S. and the need for rural broadband expansion. We do have a team of engineers working on our staff and our safety, regulatory, and technical team. Besides issues like the Wisconsin implements of husbandry laws that I talked about earlier, they also develop a lot of safety and training materials, one of which is the safety manuals. You can see a sample of here. A lot of members like to include that when they ship out their products as an added measure against liability. Also, you can see on the bottom of the screen those icons are part of a pictorial database where there's over 140 icons there. Those are free, downloadable, scalable. You can use them on decals or in your product-specific manuals. This team also acts as a liaison to more than 35 technical groups, and you may wonder how that benefits you. Well, as a part of these groups, you really get ahead of the standards and regulations coming down the pike. And you may not realize that a lot of the ASADE standards that come out actually initiated through AEM committees. So if you're sitting on that committee, you have an equal voice to everyone else around the table in influencing the direction of those standards and regulations. We also put on an excellent annual product safety and compliance seminar that's always very well attended with very timely topics, and that just continues to grow because of the relevance of the topics addressed there. We are a part of the Ag Industry Electronics Foundation, so a lot of ISOBUS work going there. They have actually just begun pushing out a database to dealerships whereby a farmer can walk in and plug in his tractor model and that of the implement he's considering buying and seeing if they're compatible. So also an excellent organization to get involved with. We've recently launched compliance training with all the new regulations being implemented in EU REACH. If you ship out any product into the EU, this will affect you. You will need to be able to identify every chemical within your product. Here in the U.S., conflict minerals is currently in effect, and you will need to be able to identify where some of your ingredients come from down to the mine. RoHS is one coming at us in the future. So these training programs enable you to track where what your chemical ingredients are, where they come from, not only for your products, but down through 22 levels of your supply chain. Encourage you to check that out online. And with that, I will give you over to Benjamin for a State of the Market report.
Thank you, Anita. My name is Benjamin Duck. I'm a market analyst at AEM. I'm here today to give you an update on the agricultural equipment market. So let's get started. First, let's take a quick look at the downturn in farm income, followed by some machinery numbers, and we'll end up with some other trends that are influencing the market outside of just the declines in farm income. So from this chart, what we can see is that after several years of robust growth, partly driven by the farmland values and a run-up in prices for agricultural commodities, the revised 2014 net farm income is set to be $113 billion, which is down 13.8% from 2013. This makes this year's net farm income the lowest since 2010, but still about $25 billion above the 10-year average. The decline in farm income is mostly due to a decline in cash receipts, which is due to a drop in commodity prices. Crop receipts are expected to decrease more than 7% in 2014, resulting from a $12.8 billion decline in corn receipts and a $6 billion decline in soybean receipts. These are the two strongest influencers in the crop receipts. When we look at livestock receipts, on the other hand, they are expected to increase 15% in 2014, sketching two different worlds within the farm industry. Now, where are these decreases located? The biggest decrease in business income can be found in the northern Great Plains, which is down 14.8%, the Heartland down 16.4%, and the Mississippi Portal down 27.5%. In other words, we can find the decreases in the Midwest and the South of the country. Now, the next big question is, how long will this downturn last? According to the USDA 2023 predictions, lower crop prices will continue to result in declines in export values and farm cash receipts through 2016. Now, as we indicated before, the downturn is not across the board. The drop in crop prices will also be partly offset by significantly higher direct government payments in 2015 to 2017 under the new average crop revenue program. Of course, farm financial risk indicators such as debt-to-asset and debt-to-equity ratios are expected to continue to be at historically low levels, indicating a strong continued financial health for the sector. Now, as can be seen in the Ag Flash data or the Ag Tractor and Combine data, the farm machinery industry has actually been more strongly impacted. You can find this information on our website under our statistics department. The flash reports show that the demand for farm machinery equipment, especially the larger pieces, have been declining in recent months. Year-to-date, four-wheel drive tractors and combines are down 15% and 17%. Less than 40 horsepower tractors, however, are up 8.7% year-to-date, and 40 to 100 horsepower tractors are up 7%. When we look at the historical data, it really shows that there's two different worlds within ag machinery. On one end, we have the smaller than 40 horsepower segment, which continues to grow in this ag downturn. And it's actually because these tractors are most likely closer related to the trends in housing as ground care services use this tractor to maintain properties. N is related to spare time farmers, which are farmers that might be located on the outskirts of the suburbs or the outskirts of the city, and they farm in their spare time. Now, on the other hand, the larger pieces of equipment, 100 horsepower plus two-wheel drive, four-wheel drive, and combines, are suffering as they are obviously more expensive and more closely tied to farm income. Of course, outside of farm income, there's other factors affecting the downturn in this segment, but we'll get to that later. Now, let's take a quick look at our North America Agricultural Equipment Trend Index. This index is calculated by taking the positive answers to a question, saying, do you see the market growing, minus the negative answers, do you see the market decreasing? And from that, we calculate a net rising index. This information is acquired quarterly. All our members that participate in the survey get the results for free, and for those that don't participate, the results are up for purchase in our store. Demand for agricultural equipment went south in the first half of 2014, reversing an upward trend that began 5 years ago. When we look at the net rising index for demand for whole goods and capital equipment, it came in at minus 17.6, down from minus 5. This was the first back-to-back quarterly decline in demand for whole goods since the end of 2009. In addition, the net rising index for components and attachments moved into negative territory for the first time in 5 years, coming in at minus 5.9, down from plus 25 in the first quarter. Now, when we look at the outlook for the next 12 months eased a little bit compared to recent quarters, largely the result of declining optimism by respondents from the component and attachment industry segment. However, the consensus remains for continued growth. If the index is above zero, it indicates that more respondents believe that the market is growing versus declining. When you see a declining trend that is still positive, it just means that more and more or less respondents think that the market is growing, but they are still the majority. Let's take a look at some more equipment data. Year-to-date, July 2014, total farm machinery shipments declined to 12.5%, which was year-to-date July. Additionally, when we look at USDA data, we can also tell that the value of machinery and motor vehicles is expected to fall by 2.4% in 2014. The decrease is mainly due to a decrease in gross capital expenditures. Of course, throughout this whole presentation, we should continue to mention that we are coming off historical heights, and farmers have actually recently updated most of their equipment in a strong cycle. This strong cycle is due to high commodity prices, due to shifts in supply and demand, a drought that spiked prices, increased ethanol usage, strong government subsidies, and strong tax incentives. One last piece of data, when we look at the Rural Main Street Economy Index from Creighton University, and we look specifically at the farm equipment sales, we can see that the October Farm Equipment Sales Index slumped to a record low of 15.1, down from 17.6 in September. This is the lowest reading that they have recorded for the equipment index since Creighton University began the survey in 2006, just further supporting the downtrend in machinery data. Now, demand has also been decreasing globally. This information is procured by us through our connection with the Agri-Evolution Alliance, a global coalition of agricultural equipment manufacturing associations for which AEM serves as secretariat. Following a record year in 2013, with an estimated production volume of about 2.15 million units of tractors, the trend for 2014 was clearly more bearish, as major markets have reached considerably lower performance in the first half of the year. If demand is decreasing globally, it means that the global slowdown will result in lower exports. U.S. agricultural equipment exports dropped 27% during the first half of 2014 compared to mid-year 2013. 4.7 billion, or almost 4.8 billion in exports were shipped to the global markets compared to $6.5 billion at the first half of 2013. Now, all world regions experienced declines, from South America with a drop of 8% to Asia with a drop of 35.7% in purchases of U.S.-made agricultural machinery. Now, as we said before, there's other factors influencing the industry outside of just farm income. When we look at tax benefits and subsidies, we see that capital expenditures on machinery are expected to decrease from their heights due to a change in the tax incentives and subsidies. The amount that they can be deducted for tax purposes is set to drop to $25,000. In the past, Section 179 or first bonus depreciation has also expired in 2013. Farmers could deduct $500,000 a year from their income taxes for equipment purchases up to $2 million. They could also claim what's called a jumbo depreciation allowance on their new equipment. And under this depreciation, farmers could really minimize the taxes that they're paying through additional machinery purchases. And when we survey the agribusiness, we can see that the change in these tax incentives is a big problem for our industry. Additionally, subsidies are also changing as the new U.S. Farm Bill is replacing the fixed subsidies with a much stronger insurance scheme, which we indicated in the first slide, or the second slide, which should balance out the decline in income quite a bit. When we look at the mainstream index again for farm values, we see that this month bankers were, when they were asked to project farmland prices changes for the next year, about 75% of bank CEOs expected farmland prices to decline over the next year, with an average decline of 5% reported. Now, other sources are not indicating a farm value decline, but a smaller growth. And even smaller growth would limit the farmer's ability to use their farmland as collateral, thus reducing their capacity to get credit. When we talked to the Kansas City Federal Reserve and looked at their agricultural finance data book, we saw that loan volumes for farm machinery and equipment continued to drop in the second quarter of 2014, marking its sixth consecutive quarter of declines. This all hints at a further slowing down in capital spending, combined with perhaps a shift towards loans for short-term operating needs. So high income, government support, and farm values in a strong cycle leads to a lot of really young equipment in the market. Many farmers have upgraded their equipment in the past 5 years, so they can probably afford to sit out a year or two without purchasing new equipment without it really affecting their productivity. On the chart here, we see 2002 versus 2012, younger than 5 years inventories for combines, forage harvesters, and 100-plus horsepower tractors. And when we check between 2002 and 2012, we see that the age of farm equipment within the United States, especially within the Midwest, has gotten a lot younger. According to the analysts from R.W. Baird, farmer high horsepower and four-wheel drive tractors are less than 5 years old, considering the unit sales of these units increased by about 34% between 2008 and 2013. In any case, using the latest USDA 2012 Ag Census and the Association of Equipment Manufacturers data, the percentage of combines aged 5 years or less had increased to between 17 and 19% in 2012, from 12% in 2007. Tractors, excluding those in the 40 horsepower or less category, had increased about 13% in 2012, from 12% that were aged 5 years or less in 2007. So there's a lot of really young farm equipment out there, and a lot of used equipment sitting in the lots. 42.5% of dealers surveyed felt that inventories were as expected, higher than they would like. 43.9% of dealers indicated the backlog was too high, and this comes from the Farm Equipment Dealer Survey. When we look at tax depreciation, it has led to very high turnover in equipment, because partly this created a very large incentive for farmers to buy new equipment, but also farmers could lower their taxes by buying this new equipment and depreciating it much faster. Of course, there's a large surplus of low-hour used tractors, as now a lot of farmers have continuously purchased new equipment. The old equipment that they use as a trade-in had almost no hours on it. So this means that we have a lot of surplus of low-hour used tractors, which has a higher value for a piece of used equipment. But on the other hand, the values are too low because there's a majority of these tractors out there in the market. Low prices for almost new tractors, or we have high prices for used equipment. Tier 4 will also only increase the amount of used tractors as exporting Tier 4 equipment will become much harder, as not every country in the world uses ultra-low sulfur diesel or has access to it. All these trends also lead to lower trade-in values. If the farmer cannot use its current piece of equipment as trade-in to buy new equipment, or the value of the equipment he's trying to trade in is too low, he might not purchase that new equipment. On the other hand, if the dealer's lots are full of used equipment, it restricts them from financing purchase of new equipment on their lots, but on the other hand, it might also stop them from accepting trade-in values. So what is really important for our industry, and we see some of our larger members doing this, is to create incentives on purchasing used equipment. whether it's different financing schemes, extended warranties, maintenance agreements, etc. Some other issues that are influencing the markets are the prices. When Tier 4 interim showed up, there were a lot of quantifiable improvements in fuel efficiencies, which would allow us to explain increases in the prices of these pieces of equipment. Now, with Tier 4 final, quantifiable improvements actually decreased a little bit. It's not as obvious, so when you try to increase the prices for these pieces of equipment, it's much harder to explain. As the Farm Equipment Dealer Survey said, 97.8% of dealers say that they're expecting another price increase on new equipment in the years ahead. Another issue is the bottlenecks that we're seeing in our infrastructure within the United States. Demand for barges is augmented through the usage of the shale oil industry. Now they're competing with farmers to push their commodities out into the international market. Our infrastructure has aged to the extent that it is hard to push out our harvest onto the international market in years of lower harvest. But when we're experiencing such surplus in supply, it becomes much harder and the bottlenecks become much more evident. When a farmer has to compete with other industries to just ship their goods down the Mississippi or to use train cars to ship their goods to other markets, they're going to have to eat this cost, which lowers their farm income in yet another way. So as I said, at the same time, the train system, outside of the barges, the train system is also congested in the United States, moving about 8% slower this year. Given all these facts, where is most equipment located? We've said that the biggest farm decreases were in the Midwest. We've seen that the largest amount of purchases are in the Midwest. Machinery asset value per operation, we see that in regards to the infrastructure, the biggest issues were shipping their product out over the Mississippi. After the rain comes the sunshine. Now, not everything is bad. As they say, the farmer has to be an optimist or he wouldn't still be a farmer. This comes from an article that our Senior Vice President, Charlie O'Brien, wrote, and is available on our website, as well as in the Ag Advisor, written by Anita Sennett. Every day, 200,000 more people need to eat, and diets are changing. Harvested land per capita is decreasing worldwide also. In the U.S., land is limited, so an increase in yields will only happen by increasing productivity, pushing for innovations that can be achieved through newer, more modern farm equipment. And while farm income is down, the farmer's balance sheet is still in good shape, with records low for debt-to-asset ratio and debt-to-equity ratio. Both ratios remain near their post-1970 historical lows as reported by the USDA. Just as long as the sunshine doesn't become a drought, we all understand that we work in a cyclical business where a variety of variables influencing the sale of the farm equipment, not at least being the weather. The current surplus of used equipment will also be pushed through the distribution channels over the next years, returning dealer inventories to manageable levels. And while the numbers are down, we still have a decent years depending on the sector or the segments we're looking at. By size, less than 40 horsepower tractors are up 8.7% year to date. In September, 40 to 100 horsepower tractors are up 7% year to date, which is positive. When we look at commodities, higher prices of milk continues to lead to purchases in the dairy sector, and lower grain prices, tight meat supplies, and a booming livestock industry will continue to lead to investments of different types of equipment. Now, we should also get ready to depreciate. Section 179, as it is so important for the agribusiness, AEM has supported reinstating this section. Section 179 deduction and bonus depreciation will hopefully be reinstated, providing the farmers with the incentives to purchase new equipment. On June 12th, the House passed America's Small Business Tax Relief Act of 2014, which would make permanent Section 79. Expensing at the levels that were in place at the end of 2013, in other words, a $500,000 expensing allowance and a $2 million investment cap. Provisions known as bonus depreciation passed in the House on July 11th. The Senate has yet to take floor action on the so-called tax extenders, but it has passed a bill out of the Senate Finance Committee. The Senate Committee's approach is to extend these provisions for the next 2 years. That being said, looking forward towards the future, we can see that there's going to be a softer market for certain segments in 2015. When we look at our 12-month planning net rising index from the Ag Survey, it is coming down currently, and we'll probably see it coming down in the next quarters, but it remains positive, so the consensus remains for continued growth When we look at dealer sentiment from the Farm Equipment Dealer Survey, products with most potential include hay and forage equipment and mid-sized tractors. While the sentiment for new equipment sales from the dealers is 50-50 up or down, on a weighted basis, overall dealers do anticipate a slight 2.6% average decline. Almost 26% of U.S. and Canada dealers expect revenues from the sales of used equipment to increase in 2015. That being said, if you have any questions, feel free to email me at bduyck, D-U-Y-C-K, @aem.org. My contact information is also under the Market Intelligence section on the website. For U.S. resources, we really have access to various data sets, producer price indexes. We do industry conditions, trend reports. We have a really great white paper out there on our website that is free for download. You have global resources where we look at various global data sets. We have a global markets report that deals with U.S. exports into every other country in the world for agricultural equipment. We have a global monitor that looks at forecast information for the drivers behind the agricultural equipment industry. We have a AgriEvolution Agritech Business Barometer, which surveys agribusiness in the United States, and we work together with other associations worldwide who then survey their members to get a global picture of where the agribusiness is going. We have tractor reports, and we have specific country reports available on our website. With that being said, I would like to pass it over to Anita Bennett.
Thanks, Benjamin. So this data that Benjamin has told you about is just part of our market information offering. The other side of that is our statistical data that is gathered through our statistical reporting programs. So to take a look at those programs, most of you are probably familiar with our Ag Flash report. So this is tractor and combine data. What you may not be aware of is that we have over 82 agriculture product programs. And those are broken down into much more detail. For example, our tractor HP is broken down by every 10 or 20. And then that is broken down into sales by down to the county level. So these are really excellent programs to calculate your market share and identify those market opportunities that are out there for you, as well as helping you to monitor your dealer performance, and it builds some excellent market cycle and trend data over time. So you may want to take a look at that web page indicated there, and if there's a program for your product, you can contact the staff liaison to get in on that. If there's not a program for your product and you'd like one, you can let them know, and they'd be happy to look into getting one started for you. For those, for our members who are unable to participate in those, our associate members who don't manufacture products, we do have these ag indices available, and you can check out our website to get more information on those. We also have a global business development team on staff, so primary focus here is China and Latin America. Our staff are native from those regions of the world, so they not only speak the language but are familiar with the business customs and really have a lot of boots on the ground contacts. You can contact them for anything from wanting to know about tariffs in those world regions to government subsidies to standards and regulations affecting your product. So please take a look at this webpage online as well, or give our team a call, and they'd be happy to help you with any of your global expansion questions. Benjamin mentioned the AgriEvolution Alliance, so just want to make you aware that we do have these contacts in these world regions. We get a lot of excellent market data from them, and if there's something in particular you are looking for, we're happy to reach out to them on your behalf and see if they can help you out. As far as trade shows go, you may recall that we launched Ag Connect Expo and Summit in 2010, and we recently announced our merger of that show together with Commodity Classic. The launch of that new, better event will be March 2016, and stay tuned to hear from our sales team on that sometime soon. On the education side, we do offer several excellent annual seminars and conferences. Our annual conference is right around the corner here, being held in Napa this year. That is always in November, and that's an excellent opportunity for executives to get together and network, and we also offer some really forward-thinking education that makes people really stop and think about what's coming down the pipe at them. Our Ag Executive Forum is our one ag-specific conference, And you can see we also do have other seminars and conferences that target various departments within your organization. We offer several different newsletters. We encourage you to check them out. We've got our Industry Advisor, which is a twice-weekly electronic update. It's a great summary of industry news. It has a lot of links that'll be kind of a one-stop shop for you to learn what's going on in the industry. Our Ag Executive Advisor is a quarterly hard copy newsletter focusing only on the ag sector, standards, legislation, and also what AEM is involved with. And then our Latin America Ag Advisor is brand new. It came out in September this year, and it's an excellent electronic newsletter, really going in depth on not only what's going on in the strictly ag, but the economy, the marketplace, the political climate of those Latin American regions. So with that, I'd like to thank you for joining us today. Please consider us a resource for your future needs, and thank you.